It takes us to our talk of the tape. Just how much gas is left in the tank of this bull run? Let's ask Liz Ann Sonders, who joins us now. She is Schwab's chief market strategist. Welcome back. Nice to see you.
Nice to see you too, Scott. Thanks.
You know, I cite the fact that people are pretty bullish. It's Bank of America and their fund manager survey today, which cited super bullish sentiment, record low allocation to cash, record high allocation to stocks, and a 3-year high in global risk appetite. What does that tell you, if anything, on where you think we might go here over this last stretch of 24 and making the turn into 25?
Well, you know, Scott, it's among many sentiment indicators that do show a decent amount of froth in the market. And it's both on the attitudinal side of things, so survey-based data, as well as on the behavioral side. You mentioned a number of them. You can see it in fund flows, particularly huge inflows into large cap equity ETFs. You're certainly seeing a lot of speculation and froth in pockets of the market, whether it's in the, art world or crypto world or, leveraged single stock ETFs. So I do worry about that as a backdrop. But even when you're at extremes of sentiment in one direction or another, it is all else equal a contrarian indicator, but it's not a very good timing tool. So you can sort of put it in your back pocket as something to be mindful of to the extent that there's a negative catalyst. It does mean that there's sort of money and attitudes on one side of the boat, but in and of itself, it doesn't suggest a downturn. I think these rotations under the surface are likely to continue to characterize the market.
But I mean, what do you think is a more important signal right now? The fact that the NASDAQ and mega cap have distanced themselves from the rest of the market? Or the fact that breadth in the market, you've had more down stocks than up stocks for long stretches here. What's more important, do you think, on the direction from here?
Well, I think we could be setting up, if this persists, for something that looks like the first half of 2024, which at the index level, you would have thought nothing to see here, nothing to worry about, successive new highs, but a lot more churn and weakness under the surface. Even as we sit right now, the average maximum drawdown at the average member level for the NASDAQ is almost 50%. It's 21% for the S&P 500. It's been somewhat masked by the strength of these names. Fast forward to call it the mid-July to early November period of time, you saw that traditional improvement in breadth where you saw participation down the cap spectrum. You saw equal weight do better. But now we've got that rotation back into the Magnificent Seven. That will, and if it continues, support cap-weighted indexes and make it look like the market is fine. But it could, again, like the first half of this year, mask some of the churn under the surface. And that wouldn't be a big surprise to us as we head into 2025.
I mean, growth is crushing value, certainly lately. I mean, it's not even close. And it does have some saying essentially what you might be suggesting as well, that you may be back to a time where tech is the most of the game in town. And who knows how long that might last.
I would say tech with a lowercase t. I think we often sort of conflate the words tech and tech, lowercase, uppercase, with the technology sector, which doesn't house all of the Magnificent Seven, of course. And in fact, the Amazon and Tesla are actually in consumer discretionary. You've got communication services in there. So if you're talking, mega cap tech related kind of names, yeah, I think we're going to continue to see a decent amount of action there, not on a consistent basis, but as you and I have talked about on this program many times before, Scott, part of these sector rotations that kicked in earnest in the mid-July period of time, that wasn't a period where that went from Mag 7 leadership to some other area and it stuck. It initially went to the interest-sensitive areas. Financials got a boost. Then it went into small caps. You saw it in industrials and some other cyclical areas. And all along, we were saying there are going to be times where those rotations take the money right back into the mega cap tech and related type names, Magnificent Seven, to, use the popular moniker. And I think those rotations could continue. But you're right. In a growth constrained macro backdrop, I think there is a premium being placed on the ability to grow earnings. I think the difference last year into next year is that level mattered a lot last year. The level of profitability, the strength, good versus bad in the balance sheet. Now I think it's rate of change that matters a bit more as we look ahead into 2025. So we also have that ability to catch kind of the improvement stories, not just good versus bad. I think it's a better or worse aspect to 2025 that maybe matters a little bit more than good versus bad.